Hello friends, as human beings, emotions have significant influence on how we invest, often overshadowing the rational assessment of market valuations and fundamentals. In periods of market euphoria, when everything seems just fine, investors tend to be overly optimistic and invest more, hoping for a quick gain while ignoring high market valuations. But when things take a downturn, fear kicks in, and investors tend to make impulsive decisions, like selling off investments to avoid losses. It is imperative from the studies that these emotional decisions create potential gap in the investor's return and often lead to less than ideal outcomes. That's where UTI Balanced Advantage Fund comes in. So, what is UTI Balanced Advantage Fund and its investment strategy? It is a dynamic asset allocation fund. The fund follows an in-house model-guided approach for dynamically allocating funds between equity and fixed income. The model takes into account various fundamental factors to determine optimal asset allocation. Implementation of model determine asset allocation is done free from biases and fund managers' influences. Fund allocates anywhere from 30 to 90% of portfolio in equities with at least 65% in gross equity through arbitrage to get equity taxation. The rest is invested in fixed income. For equity investment, the fund follows a blend strategy with large cap bias. The fund uses bottom-up approach for stock selection and also takes active sectoral calls. While for the fixed income, the fund invests in top-rated issuers predominantly through AAA or equivalent rated issuers, as objective here is to bring portfolio stability. Therefore, the primary source of alpha in the fund stems from asset allocation determined by the model as well as sector and stock selection. To sum up, UTI Balanced Advantage Fund endeavors to generate potentially reasonable risk-adjusted return through dynamic asset allocation. This fund is a suitable solution for people who often mistime the markets because of emotional biases. Investors can look to invest in the fund through lump sum or as a SIP route. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.